The US dollar desperately relies on the US non-farm payrolls to get support. Such data is usually anticipated as a crucial market-moving event, but not today. Any spike in the US currency is likely to blow out soon. After market participants' moderated fears, risk aversion is again dominating the market. Nowadays, there are three more epicenters of the coronavirus beyond China: Italy, South Korea and Iran. Over the recent days, the epidemic rates have accelerated in many European countries and in the US as well. Amid investors' flight to safe haven assets, yields of US 10-year Treasuries slumped to record lows. On Friday, the US dollar is extending its broad-based weakness. It has incurred the most losses against the yen and the euro. The euro-dollar pair surpassed the level of 1.3. The euro finds support from closed long positions under the carry trade strategy in emerging markets, with the euro as the funding currency. If risk aversion sentiment persists, the euro will gain support in the medium term. The fact of the greenback's weakness against the euro, the yen and the franc means that the main driving force on Forex is monetary policy. The US dollar lost its appeal due to higher interest rates. Fears about the fallout from the coronavirus account for a dramatic shift in expectations of further monetary easing in the US. Some market participants do not rule out another 50 basis points rate cut at the regular policy meeting in March. Today, the US dollar index sank below the level of 96. The report on the US labor market will hardly change sentiment on the US dollar. Nevertheless, the unemployment rate edged down to 3.5% in March. Besides, employment growth in the private sector was better than expected. The Canadian dollar is in suspense ahead of the similar employment report from Canada. If the data falls short of expectations, the feeble loonie is doomed to failure. In this context, the US dollar versus the Canadian dollar pair is expected to hit the highest level in 8 months. Before the publication, the currency pair was trading with an uptick at about 1.3418. The previous reports on Canada's labour market were upbeat, so they hardly served as an argument for the latest rate cut by the Bank of Canada. That's all for now. Thank you for watching and stay tuned.